ఇక్కడ Hello, my dear students. A very good evening. Can you please confirm that I am both visible and audible? Yes. Thank you. Thank you for the confirmation. Thank you. Come on, my dear friends. A very good evening and a warm welcome to all of you on discussion about CA inter GST, that is Goods and Services Tax. And I'm sure we all know that this has got a good weightage in the examination for about 50 marks. And once upon a time, your taxation paper was about 60-40, 60 marks income tax and 40 marks GST. But since past few years, it has become 50-50, wherein income tax has got a weightage of 50 marks and GST also has got a weightage of 50 marks. So that clearly signifies the importance of GST as such. See, one point I'll tell you very clearly. Being a tax professor who teach both income tax and GST, both are my interesting two eyes. I love both the subjects. But GST is something which is a new law which has come out in 2017, just a 6.5, 7 years old, 7.5 years old. That's it. This has got a good importance from an examination standpoint and also from a very, very practical standpoint, because GST has become something like day in and day out. We have been working a lot on GST, and as a chartered accountants, we have got good opportunities in GST where we can excel a lot in GST, be it GST advisory or GST litigation or GST practice. There are a lot of avenues which got created post GST has come into light. So this, starting from today, for the next 10 days, we'll spend some good time on GST, where we'll understand various interesting topics in our GST and ensure that we get some good score in GST as well. And compared to income tax, GST is little more lighter in terms of content, because in income tax, we have got multiple heads of income, TDS, deductions, so much of content is involved, and it's an ocean. But in GST, we have got some set of limited syllabus and those limited topics. Beyond that, nothing else will come. So I personally feel the content of GST is little less compared to income tax. That's where GST will not take much time compared to income tax. That is where even in our regular classes as well, we spend more time on income tax compared to GST, because income tax size is little more. Agree to that? That. So with this background, can I proceed, my dear friends? Yes, sir. Yes, sir. Yes, sir. Thank you. So let me share the screen, my dear friends. Just a second. Is my screen visible to all of you? Please confirm. Visible. Good. Fair enough. Thank you so much. Come on. Friends, now when I talk about our GST syllabus, we have got some interesting topics like introduction, supply, a very important topic. We have got a brilliant topic known as charge of GST, where we are going to learn about reverse charge mechanism. We are going to talk about an interesting scheme called composition scheme. Then we have got one more interesting topic known as exemptions. And post that we have got time of supply, value of supply, where short questions will come in the examination. Next topic, very important, ITC, which stands for input tax credit, wherein 100% a question will come in the examination. Value of supply, input tax credit. Then we have got a topic known as registration. Then we have got tax invoice, credit note and debit note topic. Then we have got a topic known as e-waybill. Then we have got topic like accounts and records. Then we have got a topic of payment of tax, TDS and TCS. Then we have got a topic of returns. And of course, last but not the least, we have got an interesting topic known as place of supply. Like this, there are various topics in our syllabus. And the interesting point in GST is something like this, that you don't have a big questions as such, which comes in examination. Unlike your income tax. In income tax, you get a lot of big questions where too much of computation of tax liability is involved. But in GST, you don't get such big questions at CA inter level. At CA final level, I do agree we have got a lot of big questions which come into the examination, but at CA inter level, it's not like that. Make sense, everybody? Done. Can I comfortably proceed? Yes, thank you very much. Come on. Friends, first of all, GST stands for goods and services tax. And it is not a direct tax, my dear friends. It is very clearly an indirect tax. And already we know what is the difference between direct tax and indirect tax. Direct tax is the tax where impact and incidence is on same person. Indirect tax is a tax where impact and incidence is on different person. Impact means who is liable to pay. Impact means what? Who is liable to pay. Incidence means who actually pays. Person who is liable to pay, person who actually pays, both are one and the same in case of income tax, indirect tax. But person who is liable to pay, person who actually pays, both are different in case of indirect taxes. That is where in indirect taxes only, there is a concept of shifting of tax burden. Shifting of tax burden concept is there only in indirect taxes. And one more interesting point, what we always say is that indirect taxes are regressive in nature. Direct taxes are progressive in nature, but indirect taxes are regressive in nature. What do you mean by the word called progressive in nature? Friends, progressive in nature means higher the income, higher the tax, lower the income, lower the tax. Regressive in nature means whatever is your income, your tax remains same. For example, friends, if you go to a restaurant, the rate of GST is 5%. Now, whether Ambani goes to restaurant, or whether Shiva Teja goes to restaurant, or a beggar goes to restaurant, still the rate of GST is 5% only. The rate of GST will not change based on the income of the person, because indirect taxes are regressive in nature. But when it comes to income tax, it is very clearly progressive in nature. Higher income, higher tax, lower income, lower tax. Making sense, everyone? Good. I prepared a very interesting summary material for GST, my dear friends. Of course, I'll share this document with you guys as well. Don't worry. This is a material in just 95 to 100 pages. I've covered the entire GST conceptually without losing a sense of any concept. In just 100 pages, I covered the entire GST, my dear friends. So please see. What is tax? Tax is a mandatory fee that is levied by the government on an individual or organization to collect revenue for public works. And I already told you there are two types of taxes called direct tax and indirect tax. And direct tax is a tax where impacted incidence is on same person. Indirect tax is a tax where impacted incidence is on different person. And what is GST? GST is a value-added tax levied in supply, that is manufacture or sale of goods or provision of services. Now, let me tell you some background. That is, prior to GST, my dear friends, in case of goods, we had VAT or CST. VAT was levied on intrastate sale of goods. CST was levied on intrastate sale of goods. I repeat again, my dear friends, prior to GST, in case of goods, that is sale of VAT or CST was levied. VAT was levied on intrastate sale of goods. CST was levied on intrastate sale of goods. VAT stands for value added tax. CST stands for central sales tax. And in case of services, there used to be service tax. And multiple indirect taxes have been combined and they made it into one nation, one tax, that is GST. Got it? Now listen. An interesting question I'll ask. Think properly and tell me. So I'm talking about a scenario prior to GST. Let us say there is one person, Mr. A, who is in Telangana state. And another person, Mr. B, who is also in Telangana state. Another person, Mr. C, he is also in Telangana state. Now let us say A sold goods to B for 1 lakh. Now tell me, when he sold for 1 lakh, what kind of tax will come, my dear friends? Come on, please tell me. What kind of tax will come when it is sold for 1 lakh, my dear friends? Whether VAT will come or CST will come. Please tell me, guys. Good, quick reactions. Definitely what will come is VAT will come. Assume VAT rate is 10%, my dear friends, which comes to 10,000. Now, Mr. B subsequently sold it to C for 1,20,000. Again, what will come is VAT will come at the rate of 10%, assume, which comes to 12,000. Now, what B is supposed to do is, he will show output tax as 12,000. He will show what, my dear friends? Output tax as 12,000 and reduce ITC, which stands for input tax credit of 10,000. And the net what he'll pay is only 2,000, my dear friends. Net what he'll pay is only 2,000, my dear friends. And the reason for this logic is what? The reason for this logic is very simple, that whatever tax he paid on purchases, that he will claim it as input tax credits. Whatever tax he paid on purchases, he'll claim it as input tax credit. So from 12,000, he'll reduce the tax paid on purchase of 10,000 and the balance net GST payable will only be 2,000 rupees, my dear friends. Just a second. There is some connectivity issue here. 1 second, my dear friends. Yeah. I hope the screen is visible for you. Yes, thank you. So what I was trying to say is that the tax which is payable on outward is called output tax, my dear friends. The output tax is 12,000 and whatever tax he paid on purchases, that will claim it as input tax credit. How much is that credit he's going to claim? He's going to claim a credit of 10,000 rupees because that is what is the tax what he paid on purchase. And the balance net GST payable will only be 2,000 rupees. Friends, clear or not with this example? But story doesn't end here. Listen to the next case very clearly. One person, Mr. A, who is in Telangana state, he sold goods to Mr. B, who is in Tamil Nadu. And B sold it to Mr. C. He is also in Tamil Nadu. And let us say, my dear friends, the value is 1 lakh rupees. Can you please tell me what kind of tax will come? Very good. What kind of tax will definitely come is CST, my dear friends. Assume CST rate is 10%, which comes to 10,000. Then B sold to C. Let us say for 1,20,000. What kind of tax will come in this case? What will come is VAT, my dear friends, but not CST because B and C, both of them are in same state. When it is same state, what will come is obviously VAT. Friends, and VAT rate, assume for a second 10%, which comes to 12,000. Now tell me, my dear friends, from the point of view of Mr. B, what is the output tax, my dear friends? Output tax is 12,000 rupees less. What will be the input tax credit, my dear friends? Can you please tell me? Come on, friends, please tell me. Output tax is 12,000. What will be the input tax credit? Good, good, good. Different answers are coming. Very good. Logical answer also has come. The answer is nil, my dear friends. And net payable is 12,000. Other words, no ITC. And the logic of this point is very clearly, my dear friends, that this CST is levied on intrastate sale of goods. And let me tell you the logic here, that this CST is levied by central government and collected by state government. And which state will take is the seller state, my dear friends. Seller state is nothing but Telangana state. Seller state is nothing but Telangana state. And subsequently, when you are selling, when you are paying VAT, you are paying VAT to which state? Tamil Nadu state. So Tamil Nadu government is very clearly telling, for the tax what you paid to Telangana state, why will I give you input tax credits? Getting the point, everybody? Come on, what is that line they started telling, my dear friends? For the tax, what you paid to Telangana government, why will I give you input tax credit? That is what is the logic, what they are trying to say. For the tax, what you pay to Telangana government, why will I give you input tax credits? Are we clear? So this was the biggest barrier in the GST law. Because biggest barrier prior to GST law. Prior to GST law, we clearly followed a concept of origin-based taxation, wherein the CST amount, central sales tax, the money is going to seller state. The money is going to seller state. But now let me tell you Under GST law, GST is a destination-based consumption tax. Come on, GST is what tax, my dear friends? Destination-based consumption tax. That is, tax will accrue to that state where goods or services are consumed. Come on, friends. GST is what tax, my dear friends? GST is a destination-based consumption tax. So tax will go to that state where goods or services are consumed. Where the goods and services are consumed, that is the state where the tax will ultimately go. And because of this reason, my dear friends, some states opposed GST. And in order to compensate the states who have lost revenue on account of introduction of GST, they are levying GST compensation cess. Come on, friends, what is that they are levying? GST compensation cess on some products such as aerated water, motor car, tobacco. On these kind of products, they are collecting GST compensation cess, and that amount is being used in order to compensate the states who have lost revenue on account of introduction of GST. Are we getting clarity, everyone? All of us? Good. Friends, please reply. Are we clear? Good. So what is GST full form? GST full form is goods and services tax. In fact, my dear friends, this GST is not something which is invented by India. France was the first country to introduce GST way back in the year 1954. And India introduced GST in 2017, 1st of July. And we adopted a country model known as Canada model, which is technically called a dual GST model. Dual GST model is a model where center and state together will levy and collect GST. That's the reason why a lot of times you find something called CGST and SGST. And for interstate, you will find something called IGST. For intrastate, you will find CGST and SGST. For interstate, you will find IGST. That's why this is called dual GST model, wherein center and state together will levy and collect GST. Are we getting clarity on this point, everyone? Friends, come on, please reply. So GST is what tax, my dear friends? GST is a destination-based consumption tax. So tax will go to that state where goods or services are consumed. And which country introduced GST first, my dear friends?
Canada.
Very good. Which country introduced GST first is France, not Canada. Canada country model we have adopted. We have adopted the model of Canada model of GST. Clear? And of course, in GST, you don't have a concept called previous year assessment year and all. It keeps going on monthly basis. So there's no concept of PY, AY, which comes into picture in case of GST. Don't worry. Clear? Good. Get back it. GST is a destination-based tax on consumption of goods, services, or both. And GST facilitates continuous chain of tax credit. And the tax burden is finally borne by end consumer. Of course, my dear friends, ultimate burden will always fall on the end consumer only. because there's always a shifting of tax burden. The end consumer will bear the burden. Next, GST removes cascading effect of taxes. Cascading effect means tax on tax. That is removed. The logic is very simple, because of availability of ITC, which stands for input tax credit. Because of availability of ITC, my dear friends, we say that GST removes the cascading effect of taxes. There is no tax on tax. Next, framework of GST in India, dual GST model. India has a federal structure, central and state government. So India has adopted dual GST model. Both central and state governments concurrently impose taxes. CGST, SGST, UTGST in case of Union Territory. The dual GST model facilitates the levy of respective state GST component simultaneously with central component in case of intrastate supply. And for intrastate supply, we'll charge IGST. You should observe one very important word here. That word is called supply. Friends, prior to GST law, we used to use the word called sale, purchase, providing service, rendering service. All that words are gone. In GST law, there is no word called purchase or sale. We have only one word called supply. And for purchase, we use the word inward supply. And for sale, we use the word outward supply. But we never use a word called purchase and sale. We only use a word called inward supply and outward supply. Clear, friends? So henceforth, I don't want any one of you to use the word called sale. Your word should only be supply. And that's how fancy way we always tell to the students that GST will apply only if the transaction is supply. And if transaction is supply, then definitely GST will apply. So if it is supply, then GST will apply. GST will apply if it is supply. That's it. Are we all getting clarity on this point, everyone? Good. Fair enough. Come on, see. Legislative framework. There is single legislation CGST Act for levy of CGST component. And there are multiple legislation for each state to levy respective SGST. And there are also multiple legislation for each union territory to represent to respective UTGST. And we have got one GST common portal known as www.gst.gov.in. In fact, that is a portal where everything related to GST happens there only. Whether it is registration or payment of tax or filing of returns or filing of appeals, everything related to GST law happens only in one common portal that is called www.gst.gov.in. A website managed by GST Network, which is a wholly owned government company, set up by government to establish a uniform interface for taxpayer and a common and shared IT infrastructure between center and state. And the common system provides linkage to all state UT commercial departments, central tax authorities, taxpayer, banks, and other stakeholders. Yes. This portal is one single common platform for all GST related services like returns, waybill, payments, etc. And the ecosystem consists of all stakeholders, starting from taxpayers to tax professional to tax officials to GST portal to banks to accounting authorities. Ultimately, everybody is interconnected on the GST portal. GSP and ASPs, they are called GST Suvidha providers who have access to GST system and have capability to develop applications to be used by taxpayers for interacting with network. Basically, they are software providers, guys. ASP acts as a link between taxpayer and GSP. Compensation cess, already I told you, my dear friends, and that compensation cess is now extended up to 31st March 2026. Initially, they told only for 5 years, up to 30th June 2022, but they extended up to 31st March 2026. And the fundamental purpose of GST compensation cess is to compensate those states who have lost revenue on account of introduction of GST. That's the whole fundamental idea behind introduction of GST compensation cess. Then, exclusion from GST. Friends, there is a definition for GST wherein Article 366(12). In fact, my dear friends, just to give a background to you for 1 minute, there was a need to amend the Constitution of India to introduce GST, my dear friends. The reason for that is very simple. Prior to GST law, there were some taxes which were levied exclusively by central government. And there were some taxes which were levied exclusively by state government. But there was never a tax levied by central and state together. And in order to give the dual power to central and state, there was a need to amend the constitution. And for that purpose, they brought Constitution 122nd Amendment Bill 2014. And this has become Constitution 101st Amendment Act 2016. You should not get it out. Sir, why 122nd bill has become 101 Act? The logic is very simple. It's not necessary that every bill will become an act. Because any bill will become an act only if it is approved by both houses of parliament and it is signed by president. If not, bill will not become act, my dear friends. Got my point, everyone? So there was a need to amend the constitution to give that dual power, and they brought Constitution 122nd Amendment Bill 2014, which has subsequently become Constitution 101st Amendment Act 2016. And Article 3612A clearly says that GST is a tax on supply of all goods or services or both, except alcoholic liquor for human consumption. So alcohol liquor for human consumption, not industrial alcohol. We are talking about alcohol liquor for human consumption. Alcohol liquor for human consumption is permanently kept outside GST by way of definition itself, which clearly says that GST is a tax on supply of all goods or services or both, except alcoholic liquor for human consumption. And let me tell you, my dear friends, there are 5 petroleum products. There are 5 petroleum products which are temporarily kept. What, my dear friends? Temporarily kept outside GST. I repeat once again, there are 5 petroleum products which are temporarily kept outside GST. And the 5 petroleum products are petroleum crude, high-speed diesel, motor spirit, natural gas, aviation turbine fuel. I repeat once again, friends, there are 5 petroleum products which are temporarily kept outside GST. And the 5 petroleum products are petroleum crude, high-speed diesel, motor spirit, natural gas, aviation turbine fuel. Clear, my dear friends? Come on, what are 5 petroleum products? Petroleum crude, high-speed diesel, motor spirit, natural gas, aviation turbine fuel. These 5 petroleum products are temporarily kept outside GST. If not, GST is applicable on everything, because GST is a tax on supply of all goods or services or both, except alcohol and liquor for human consumption. And these 5 petroleum products are temporarily kept outside GST. Are we clear till this stage? Please reply. Come on, guys. I want a reply. Yes, perfect. Thank you. Coming back, my dear friends. GST is levied on all goods services except alcohol liquor for human consumption, petroleum crude, high-speed diesel, motor spirit, natural gas, aviation turbine fuel, opium, Indian hemp, and narcotic drugs and narcotics. On these narcotics and drugs, there is no GST, my dear friends, because the old taxes still continue to apply. Old taxes like excise duty, VAT, GST, they all continue to apply. Next. Taxes subsumed under GST, an important discussion, my dear friends. Come on, please see that. Central taxes which got subsumed in GST. Central excise tax, service tax, CVD, special CVD, which was levied on imports, But of course, in case of imports, we still have something called BCD, which stands for Basic Customs Duty. Don't think that customs duty is completely gone. Basic customs duty is still there. Next, central sales tax, surcharge and cess related to supply of goods or services. So these all central taxes have been subsumed in GST. That means they are no more there. Next, state taxes, luxury tax, tax on betting, gambling, lottery, purchase tax, VAT and sales tax, tax on advertisement, entertainment tax, except on local bodies, municipal corporation, entertainment tax. Before, when you used to go to watch movies, they used to collect entertainment tax, but now that's gone. Then we go to watch a movie, in the movie ticket also, they still charge GST only. Surcharge related to supply of goods and services. In exam, couple of times questions have come for 2 marks or 3 marks, where they asked what list the taxes which are subsumed in GST. Important. Yeah, can I proceed? Good. Next. Benefits of GST. Creation of unified market, boost to Make in India initiative, enhanced investment and employment, reduced compliance procedure, cascading effect is mitigated, ease of doing business, benefit to small traders and startups, organized chain of tax credit. These are all the various benefits of GST, my dear friends. Constitutional amendment, I already told you there was a need to amend the constitution to give dual power to central and state. Because prior to GST, there were taxes levied by center, there were taxes levied by state. But there was no tax levied by center and state together. And to give that dual power, they started amending the constitution. Article 246A, levy and collection of GST on intrastate supply. Intrastate supply, both central and state. Intrastate supply, only parliament has got power, that is central government. Next. Article 279A, GST Council. An interesting concept, my dear friends. I'll give an example with numbers so that full clarity will come. You would have heard in newspaper, TV so many times about this word called GST Council is meeting, GST Council is meeting, something like that. This GST Council consists of members from center as well as state. From center side, there are 2 members, my dear friends. Number 1, Union Finance Minister, who act as chairman of GST Council. Second, Minister of State for Finance, who is like Deputy Finance Minister. And from state side, my dear friends, we have every state representative. I repeat again, from state side, we have got every state representative, my dear friends. And there is a voting which goes on, because any change in GST law or any decision with respect to GST is taken by central government only on the recommendations of GST Council. Central government does any change in GST law only upon recommendations of GST Council. And the concept of GST Council is given by Article 279A. I repeat again, the concept of GST Council is given by Article 279A, which talks about GST Council. And my dear friends, center, both members together, they have got 1/3 weighted votes. And state, my dear friends, all of them together, they have got 2/3 weighted votes. Come on, my dear friends. Center, both persons put together, they have got a weight of 1/3 weighted vote. And state, all persons put together, they have got 2/3 weighted votes. But the big joke here is, in fact, not a joke, a very interesting point actually. To pass a resolution, there should be 3/4 majority. This is actually a beautiful point. Center has got a weight of 1/3, and all states put together, the weight is 2/3. But a resolution can be passed only when there is a 3/4 majority. Meaning of the point is what? Center alone, I repeat again, center alone or state alone cannot independently take any decision. Any decision can be taken only when center and state together says yes. Now, what does it mean? Let me take a small example. Let us say for some decision, center said yes. And from state side, 24 attended, 12 said yes. Please tell me, is the resolution passed? That's my question to you. For some decision, center said yes, states 24 attended, and out of 24, 12 said yes. Is the resolution passed? Come on, guys, don't relax. Please give me an answer. Is the resolution passed or not passed? Some are telling yes, some are telling no. Crazy. Listen. So when center said yes, my dear friends, 1/3 is done. That means what? 33.33% is done. And when states, how many have attended? 24 have attended. Out of that, 12 said yes. 12 by 24 into 2 by 3. Why 12 by 24 into 2 by 3 is reason, is logic of this point is because they have got 2/3 weighted vote, which comes to 24 by 72, which comes to again 33.33%. And total is 66.67%. Is the resolution passed? Answer is no. Because to pass a resolution, there should be 3/4 majority. How much is 3/4, sir? 3/4 is 75%. But it is only 66.67%. How resolution is passed? It's something like a special resolution in company law. Getting it, guys? So center has got a weight of 1/3 and state, all states put together, the weight is 2/3. And to pass a resolution, there must be a 3/4 majority. Are we clear? Please reply. Yes, sir. Come on. Are we clear? Very good. Good. So that's the story of GST Council Article 279A. Going back, my dear friends. That is what I was trying to explain to you about GST Council Article 279A. And the quorum required for the meeting is half of the members. When I say quorum, I'm sure you know what is quorum. Quorum is the minimum number of members to be present to make the meeting valid. Minimum number of members to be present to make the meeting valid. That is half of the members, my dear friends. And decision, majority not less than 3/4 of members present and voting. And weightage, 1/3 for center, 2/3 for state. But no decision will be taken unless central government will give assent. Functions of GST Council. They ensure that they give recommendations on taxes, taxability and non-taxability, threshold limits, rates, special provisions, model law, special rates, recommend the date on which GST should be levied on petroleum and allied products. All this will be done by GST Council only, my dear friends. Clear? Done. So that's the story of this introduction to GST, my dear friends, where you have to understand from where the GST law has flown. I'm sure we got clarity on these points. Come on, friends, please tell the answer for this point. GST stands for what? See the options. How I give? So what is the answer? Which option? Some are telling option A. Oh my God. Good and simple tax. There. In India, GST became effective from which date, sir? 1st of July 2017. And GST is a what based tax? GST is, of course, what based tax, my dear friends? Destination based tax. Clear, my dear friends? Next, which of the following is not subsumed in GST? Fourth question, what is the answer? Of course, option B, my dear friends. Then, fifth one, for the purpose of GST, which constitution amendment was passed? Fifth question, what is the answer, my dear friends? Fifth question, the answer is clearly option A, my dear friends. Constitution 101 Amendment Act 2016. Every person registered under GST shall be given a unique number called what? I hope you know this answer. Sixth question, my dear friends. Tell the answer. Sixth question answer is option B, my dear friends. GSTIN, which stands for GST identification number. And this is, my dear friends, a 15-digit alphanumeric code. And in this 15-digit, my dear friends, first two represent what, my dear friends? State code. Next 10 is PAN. And next is entity number. Entity number means if it is first registration, it will be number 1. And if you take second registration in the same state, it will be number 2. Third registration you take, it will be number 3. And next is always Z, my dear friends. And this is fixed. 14th one will always be Z. And the last one is, my dear friends, randomly assigned, which could be a number or it could be an alphabet. That's the story. Are we getting clarity, my dear friends? That is the reason why we say very clearly that under GST law, registration is to be obtained state-wise, my dear friends. Under GST law, registration is obtained state-wise but not centralized. I will tell one interesting line. Listen very clearly. For multiple states, separate registration is mandatory. But for multiple place of business within the same state, separate registration is optional. I repeat once again, my dear friends, for multiple states, for separate state, separate registration is mandatory. But for multiple place of business within the same state, separate registration is optional. I hope we are clear. Good. Please reply, guys. Good. Seventh question, what is the answer? Newly article empowering president to constitute GST council. Of course, article 279A. Eighth one, who shall be chairman of GST council? Tell me, guys, what is the answer for eighth one? Union Finance Minister. Next, GST is payable where? State where goods and services are finally consumed, because GST is clearly a destination-based consumption tax. Next, tobacco products are subject to which of the following taxes? So tobacco is one such product on which there is excise duty also, GST also. Both are levied. Tobacco products is one such product on which there is excise duty also, GST also. Are we clear till this stage? Please reply. Friends, I want your participation. You cannot afford to relax. Our exam is close by. So please reply. Good. Some descriptive question. Write a short note on various lists provided under 7th schedule to the Constitution. Union list, state list, concurrent list. You would have learned this in income tax as well. Discuss how GST resolved the double taxation dichotomy under previous indirect tax law. We will, both central and state together will levy and collect the GST. And ITC is of course allowed. Dual GST model. Central and state tax subsumed in GST. Important question. Write a short note on GST Council. Article 279A. Center, state, center weight, state weight. All you have to explain there. See here. First one, simple question. Following intra-state supply is made by following persons. Taxable supply of 10,000 is made by Anurag to Bhagwat. Transaction to 12,000 is made by Bhagwat to Chandan. Calculate total tax payable. First time 10,000 will charge 9%, 9% GST, 11,800. And the tax charge will be remitted by Anurag to appropriate account of central government, state government. And Anurag is the first state supplier. Subsequently, what will happen? On 12,000 will charge GST. And that GST, what we pay, will compute it as output tax and we claim input tax credit. And the net is the GST payable. Friends, correct? No, friends? And friends, there are two types of supply known as intrastate supply and interstate supply. In case of intrastate supply, we charge CGST and SGST. And for intrastate supply, we charge IGST, my dear friends. Correct? Now, how do we utilize input tax credit? Generally, a question comes in the exam on this point. Input IGST shall be first used for output IGST. Come on, friends. Input IGST is first used for output IGST. I repeat one more time, my dear friends. Input IGST is first used for output IGST. Input IGST is first used for output IGST. Then second, it is used for output CGST or SGST in any order or any manner. When I say any order, you can use first for CGST, then for SGST, or first for SGST, then for CGST. Any manner means you can use 60% for that, 40% for this, 70 for this, 30 for this, 50-50 also you can use. You are asking, so practically what you do? Practically, we always do 50-50 because we always want to use optimum utilization. In order to make optimum utilization, we'll use in the most beneficial manner. Then, second, input CGST. Input CGST, first we'll use it for output CGST. Second, we'll use it for output IGST. The third one is, my dear friends, input SGST. We'll use first for output SGST. Second one, output IGST. And some important note, what I'll give is number one. Input CGST cannot be utilized for output SGST. And vice versa. Come on, friends, what is the line I wrote? Input CGST. Come on, what is the line I wrote, my dear friends? Input CGST. Input CGST cannot be utilized for output SGST and vice versa. That means we can't use CGST for SGST, SGST for CGST. Then input CGST and SGST to be utilized only after input IGST is fully exhausted. That means first to use entire IGST credit. I repeat once again. First to use what, sir? First to use entire IGST credit. Then only you please touch CGST, SGST credit. First to use entire what credit, my dear friends? First use entire IGST credit. Then only please use CGST and SGST credit. A very interesting point. Next. For payment of output IGST, first to use input IGST, then input CGST, and then only input SGST. This is for payment of what, sir? For payment of output IGST. What law is telling? First to use input IGST, then use input CGST, then only use input SGST. This is also an important principle. So these are all the points which are the principles of utilization of input tax credit. And generally when question keeps coming in the examination, sir, GST part is very scoring. We cannot afford to lose marks. And I keep telling the students that we have to target around at least 40 marks in GST. Yeah. Student asking, sir, why is that last order, sir? See, last order, the point is only one thing, my dear friend. For the last point, that is output IGST. When you are paying IGST, law is telling first to use IGST credit, then use central, then only use the state credit. That is the order what they have given for the utilization of this credit. And a specific order is use central taxes first, then use state taxes. Because what you are paying is central tax only. Because IGST is collected by central government only. That is the logic. Yeah, let me ask you one question. You please tell the answer. One person, Mr. X or Mr. A, student is asking, sir, is it resident or non-resident? What difference it makes for you? Are you in income tax class or GST class? Correct? No? Please don't ask the questions. Let us say input IGST 3 lakhs, input CGST 2 lakhs, input SGST 2 lakhs. Output IGST 2 lakhs, CGST 3 lakhs, SGST 3 lakhs. Come on, friends, please compute the net GST payable. There, the columns what I'm going to take is IGST, CGST, SGST. What is the output figure, my dear friends? 2 lakhs, 3 lakhs, and 3 lakhs. Less input tax credit. Please tell me which credit I'm going to use first. I'm definitely going to use IGST credit, which is 3 lakh rupees. I'll use 2 lakh here. What is the balance? Balance 1 lakh. I already told you balance 1 lakh, you can use it for CGST or 1 lakh you can use it for SGST in any order or any manner. Always advised point is 50,000, 50,000. Sometimes in exam, they'll ask you, come adjust in such a manner that SGST should be minimum. SGST should be minimum. Then use everything for SGST only. Sometimes they will tell adjust in such a manner that CGST should be minimum. Then use everything for CGST only. And if question is silent, I suggest you do half of. Getting clarity? The question is silent, do half of, that's it. CGST credit 2 lakhs. SGST credit 2 lakhs. Net GST, here it will be nil. CGST is 50,000. SGST of 50,000. That's it. I hope we got clarity. If in the question they tell compute in such a manner that CGST should be minimum, then use everything for CGST. If they tell SGST should be minimum, use everything for SGST. If the question is silent, you please divide between CGST and SGST equally. And I'm sure presentation is also clear for you. This is how you have to present in the examination also. Student is telling, sir, please once again explain, sir. My dear friend, once again explanation, very simple point. You have to please see that IGST credit is 3 lakh rupees. When IGST credit is 3 lakh, first I'll use it for output IGST 2 lakhs. What is the balance figure? 1 lakh. This 1 lakh I can use it for CGST, or I can use completely for SGST, or I can use it partly also. That is why the most suggestible suitable option is always 50-50, you divide equally. But in the question, if they tell compute in such a manner that SGST should be minimum, then use everything towards SGST. If they tell in the question that compute in such a manner that CGST should be minimum, then use everything for CGST. If question is silent, split equally between CGST and SGST. I hope you are clear, my dear friend. Are we clear? Can I proceed? Please reply. Come on, friends. Compute net GST payable. Student asking one question. Sir, what is all about ITC of IGST? With IGST first is used for output IGST, then CGST, and then only SGST. No, my dear friend. That is not the answer. If it is input IGST, first we'll use it for output IGST. Then you can use it for CGST or SGST in any order, any manner. That is what I was trying to explain to you. Clear, my dear friend? Good. One more student is asking, sir, can ITC of unit rate be used for setting of state tax? See, UT-GST credit, of course, if you are dealing in that same state, you will have UT-GST output only. How will you have output SGST? How is it possible? You think logically. If you are in that UT, you will pay CGST, UT-GST. How can there be CGST and SGST? Input UT GST can be used for output UT GST or output IGST subsequently. Done. Solve this question. Solve this question, guys. Come on, solve this. Yes. Students have got different answers as expected. Come on. How is that we are going to do the computation, my dear friends? I will again take 3 columns. IGST, CGST, SGST. What is the output tax, my dear friends? 6 lakhs, 4 lakhs, 4 lakhs. Correct. Six lakhs, 4 lakhs, 4 lakhs. And what is the input tax credit? What is the credit I'm going to use first? I'm going to use the credit of IGST credit. I already told you that without using IGST credit, you can't use CGST and SGST. And what is the IGST credit? 5 lakhs. Next, come on. What is the CGST credit I've got, my dear friends? CGST credit is 3 lakhs. SGST credit is also 3 lakhs. So my straight answer in all the cases, the net GST payable is 1 lakh each. Some student has got answer as 1,50,000, 1,50,000. I don't know how we got that answer. But that is wrong. I hope we're all clear with this working, guys. Make sense, right, everybody? Very clear. That's it. So that's the story of utilization of input tax credit, friends. That's all. That's about the basic of introduction of GST, my dear friends, which you need to understand very clearly. How do we compute the GST payable? And from where the GST law has emerged, and what is the beauty of this GST? Simple. Are we clear? But some important points I want to highlight in this context, that is, GST is a tax on supply of all goods, services, and all. What is goods, what is service, all that we are going to learn next. And of course, we are going to learn some very important topic next. That topic is called supply, which we are going to learn today, my dear friends. And supply is very important concept because I already told you that GST will apply only if the transaction is supply. And if it is supply, then GST will apply. And this concept of supply is given by Section 7 of CGST Act, which deals with the concept of what is supply. Clear? Come on, let me proceed. Important definitions. We'll come to definition one by one, sir. Okay? Section 7, supply. 7(1)(a) says, okay, before that, I'll write here. Sir, Section 7 deals with the concept of supply. In Section 7, we have got 7(1), 7(1)(a), 7(2), and 7(3). And in 7(1), we have got 7(1)(a), 7(1)(AA), 7(1)(b), and 7(1)(c). 7(1)(c) is dealt by Schedule 1, which talks about transactions regarded as supply, even though there is no consideration. Come on, friends, what is that line? Transactions regarded as supply, even though there is no consideration. That means even though there is no monetary consideration, still the transaction is regarded as supply. That is governed by 7(1)(c), which we'll talk. 7(1)(a) is dealt by Schedule 2 as to what are regarded as supply of goods, what are regarded as supply of services. 7(2), my dear friends, in that we have got 7(2)(a), 7(2)(b. Star. Now, what is that star? I will write here. 7(2)(b) talks about Schedule 3, my dear friends, which talks about transactions which are neither supply of goods nor supply of services. Come on, friends, what is that line? Transactions which are neither supply of goods nor supply of services. It is neither supply of goods nor it is supply of service. The moment we say it is neither supply of goods nor supply of service, that means what? GST will not apply. Obviously, because it is not supply of goods, it is not supply of service. 7(2)(b) talks about notified statutory activities. They are also neither regarded as supply of goods nor regarded as supply of services. And 7(3), my dear friends, central government, on the recommendations of GST Council, central government, on the recommendations of whom, my dear friends? GST Council. They have got power with them to notify a transaction as supply of goods and not supply of service, or reverse scenario, it is supply of service but not supply of goods. To tell that, they have got a right. Who have got a right? Central government has got a right. On the recommendations of whom? GST Council. Now, who is it there in GST Council? Already we discussed that in Article 279A. Center, 2 members. State, all state representative. Center weight 1/3, state weight 2/3. But to pass resolution, we want 3/4 majority. Are we clear till this stage? So these all subsection clauses we have got to learn in Section 7 supply. Very important topic. Friends, please reply. Are we clear till this stage? Good. Thanks for the participation, my dear students. See, your participation is the key. The more you participate, the more wonderful it looks. Thank you. Come on. Section 7(1)(a) is what we are trying to learn first, my dear friends. That is, supply includes all forms of supply of goods or services or both, such as sale, transfer, barter, exchange, license, rental, lease, or disposal, which is made or agreed to be made for a consideration by a person in the course or furtherance of business. Come on, friends, let's highlight this word once again. Supply includes what? All forms of supply of goods or services or both. Now, what is the meaning of this word called goods? Let's learn. 252, you'll find something called goods. Goods means every kind of movable property other than money and securities. That means on securities, there is no GST. On shares, debentures, bonds, units, there is no question of GST. Goods cover what? Every kind of movable property other than money and securities, but includes actionable claims, growing crops, grass, and things attached to or forming part of the land which are agreed to be severed. Severed means cut before supply or under contract of supply. That means what? If there is a plant on the land, imagine there is a land. On the land, there is a plant. If this plant is chopped, then this plant is regarded as goods. If it is not chopped, it's a part of the land. Then it is not regarded as goods, because goods cover every kind of movable property other than money and securities, but includes what? Actionable claims, growing crops, grass, and things attached to or forming part of land which are agreed to be severed before supply or under contract of supply. Are we clear? Good. And what is money? Money means Indian legal tender or any foreign currency, check, promissory note, bill of exchange, letter of credit, draft, pay order, traveler check, everything which is recognized by RBI when used as consideration to settle an obligation or exchange with Indian legal tender of another denomination, but shall not include any currency that is held for numismatic value. Numismatic value means old coin currencies. Old coin or currency which is held as a passion that we are maintaining old coins or old currency. That is called currency held for numismatic value. That is not covered in definition of money. If it is not covered in definition of money, that means it becomes goods. Because goods does not cover money. Goods does not cover money. Money does not cover currency held for numismatic value. Getting the point, everybody? Interesting. Come on. Goods cover what? Every kind of movable property other than money and security. Securities means what? Shares, debentures, bonds, everything. But includes actionable claim. Friends, actionable claim basically means an unsecured debt. An unsecured debt which can be enforced in court of law. Classic example is a lottery ticket what you have purchased. Something like that. Please see. Any debt other than debt secured by a mortgage of immovable property or by hypothecation or pledge of movable property, or any beneficial interest in movable property not in possession whether actual or constructive, which civil court recognizes as affording grounds for relief, whether the debt or interest be existent, accruing, conditional, or contingent. An unsecured debt which can be enforced in the court of law, that is called an actionable claim. Getting the point, everybody? Come on. What is section 7(1)(a)? Supply includes all forms of supply of goods or services or both. What is goods we discussed. Now what is service? Service is defined by section 2(1)(2), which clearly says service means anything other than goods, money and securities, but includes activities related to use of money or its conversion by cash, any form, denomination, for which consideration is charged. And let me also tell you, Service also includes activity of facilitating transaction in securities. That means something like stockbroker, securities agent who get commission income. On that commission income, he is definitely required to pay GST. And what is this conversion of money? Basically, money changing activity. We give dollars, take rupees. I mean, we are converting foreign currency and all. There some consideration is charged. On that consideration, GST will apply. And how to determine the value of supply in those cases, we have got that concept in CA final level. Don't worry. Friends, are we clear in this stage? So friends, come on. What is section 7(1)(a)? Supply includes all forms of supply of goods or services or both, such as what? Sale, transfer, barter. Sale means where a right is given along with ownership. Transfer is where a right is given without ownership. And barter exchange, what is the difference? Barter is case where goods are exchanged for goods or service exchange for service, something like that. Barter exchange difference is that in barter, there is no monetary consideration involved. But in exchange, there is some monetary consideration involved. Yeah. When we go to a shop and exchange our old phone with new phone, we don't use the word barter, we use the word exchange. So supply includes all forms of supply of goods or services or both, such as sale, transfer, barter, exchange, license, rental, lease, or disposal. Rental lease difference is that for long term we use the word lease, for short term we use the word rental. So sale, transfer, barter, exchange, license, rental, lease, or disposal means sold as scrap. Made or agreed to be made. That means transaction is done or yet to be done. For what? Consideration. It is not free of cost. There is a consideration. For a consideration by a person in the course or furtherance of business. For in the course of business means doing something in the course of business. Furtherance means expansion of business. If it is in the course of business, then only we call it as supply. If it is not in the course of business, we don't call it as supply. For example, sir, I'll give a small example here. So let us say Shiva Teja, I go to one jewelry shop. Come on, where did I go? I go to one jewelry shop. And what I've done is I went to a jewelry shop person and told, I want to exchange this kada. I'll give this old kada and I want to buy a new kada. Clear? The bracelet. I want to give this old bracelet and I want to buy a new bracelet. Now tell me, from Shiva Teja's point of view, it is not a supply. But from the shopkeeper point of view, it is a supply. From shopkeeper point of view, it is supply because it is in the course of business. But from Shiva Teja's point of view, it is not a supply because from Shiva Teja's point of view, it is not in the course of furtherance of business. Are we getting clarity on this point? Very interesting point. My God. Done. So supply includes what? All for the supply of goods or services or both, such as sale, transfer, barter, exchange, license, rental, lease, or a disposal, which is made or agreed to be made for a consideration by a person in the course or furtherance of business. That's it. Next point. 7(1)(b). Import of services for a consideration, whether or not in the course of furtherance of business. That means whether you import for business use or you import for personal purpose, still it is regarded as supply. Personal purpose example, you have taken some Netflix subscription. When you take from Netflix subscription, Netflix is not in India, it is outside India. So we definitely call it as import of service. There, even though you have taken for personal purpose, still it is regarded as supply because the word used in the law is import of services for a consideration, whether or not in the course of furtherance of business. And activity is specified in Schedule 1, 7(1)(c), which talks about transactions regarded as supply, even though there is no consideration. Generally, consideration is there only. We try to pay GST. And we're talking about some cases where there is no consideration, but still GST will apply. That's a crazy point. Section 7(1)(c), read with Schedule 1. Clear, all of us? Good. Come on, please see. Consideration means, of course, something in return, whether it could be monetary form, non-monetary form, but does not include subsidy from central government or state government. And deposits will not be considered, my dear friends, unless the deposit will be adjusted towards the consideration. Refundable deposit is not a consideration. Next. Course of business, furtherance of business, already I told. Selling personal asset after use, it's not a supply. Old jewelry after use, it is also not a supply. And the business means what? Any trade, commerce, manufacture, profession, everything will be covered there. Provision of facilities by club or association to its members, that is also regarded as a business. And person, of course, covers individual, HUF, company, firm, LLP, AOP, BOI, body corporate, corporate society, local authority, central government, state government. These all people are covered in definition of person. A simple point. Now, 7(1)(a). What is 7(1)(a)? Activities or transactions between persons other than individual to its members or constituents. Basically, we call it as club to members. Let us say Rotary Club is providing services to its members. That will be regarded as supply, and both are deemed to be separate persons. Should be deemed as supply by deeming that persons as separate persons. In 7(1)(b), 7(1)(c), already I told you. Let's talk about 7(1)(c), Schedule 1. 7(1)(c), read with Schedule 1, my dear friends, basically talks about what are the transactions which are regarded as supply, even though there is no consideration. So name only says transactions regarded as supply, even though there is no consideration. There is no money which is coming, but still it is regarded as supply. A very crazy point and a very important point. We have got 4 important points there, my dear friends. Please see very carefully. Number 1, permanent transfer or disposal of business asset on which ITC has been availed. That means you gave some asset as gift. Permanently you transferred, you donated some asset on which you have taken input tax credit. That means on that you already enjoyed input tax credit. Then that will be regarded as supply, even though there is no consideration. Second case, supply of goods, services or both between related persons or between distinct persons made in the course of furtherance of business. It is important to understand who are distinct persons and related persons. First, let me tell you, distinct person means PAN is same, but GST number is different. Distinct person means PAN is same, but GST number is different. But who are related persons? Please see here. Related persons means if they are officers or directors of one another's business. I am director in your business, you are director in my business. Then such persons are legally recognized partners, partnership firm partners. They are employer and employee. A third person controls, owns, holds, directly or indirectly, greater or equal to 25% of voting stock or shares of both of them. 25% or more they are holding. One of them controls the other. A third person controls both of them. Such persons together control a third person. The difference between these 3 points, sir. Please get a clarity of difference between these 3 points. I am controlling you or you are controlling me. Then we both are related person. Second case, we both are controlled by a third person. Then also we are related person. Next case, we both are together. We both are together controlling a third person. Then also we are related persons. Difference you understood? Exactly. So one of them controls the other. Next, a third person controls both of them. Such persons together control a third person. Such persons are members of the same family. And this word family is defined in the law. GST law is very careful. If they don't define today's date, who is sitting with whom, nobody knows. Yeah, horrible. Yeah, what is family? Very important section defined by section 249, which says family includes number one, spouse and children, whether or not dependent. That means spouse and children, they're always regarded as family. Next, brothers, sisters, parents, and grandparents. Brothers, sister. Don't use the word brother's wife, sister's husband. All that is not covered. This is not income tax gift concept. In income tax gift concept, it is a very big story. But here, what is covered is only brothers, sisters, parents, grandparents. Only if they are dependent. This word is important. Only if they are dependent. That too, how dependent? Wholly or mainly. If they are not dependent, then they are not regarded as related persons. So I'll give a small example, sir. Dependent here means financially dependent. So let me tell you, my father is not dependent on me financially. He has got his own business. I am not dependent on him financially. I have got my own activity. Now tell me, from my father point of view, am I a related person? Definitely answer is yes. From my point of view, is my father a related person? The answer is no. The answer is definitely no. Getting my point, everybody? Because it covers what? Spouse and children are always covered. Brothers, sisters, parents, grandparents are covered only if they are dependent wholly or mainly. Next. One of them is sole agent or distributor of another. Sole means is the only agent. One of them is a sole agent or distributor of other. So these are all the cases where they are regarded as related persons. And distinct persons, simple concept, PAN is same, but GST number is different. So what is the point we are trying to discuss here? Supply of goods or services or both between related persons or distinct persons in the course of furtherance of business. Now I'll give a small example here, sir. Let us say my wife is asking me on the occasion of marriage anniversary, what is a gift for me? What I've done is I gave a gift of, let us say, one necklace. Out of tremendous love and affection, I gave a necklace as gift to my wife. Tell me, is my wife a related person? Yes. Is it supply? Answer is no, because it is not in the course of furtherance of business. Next case I'll ask you. That is, let's say my wife is asking, what is my anniversary gift? I told her, you come to my class, you can attend the GST entire classes free of cost. Don't pay any fees for GST class. You take entire GST coaching free of cost from me. Is it a supply? Yes. Because it's supply between related person in the course or furtherance of business. So friends, what is the first point? Permanent transfer or disposal of business asset on which ITC is claimed. Second point, supply between distinct or related person in the course or furtherance of business. Third point, supply of goods by principal to agent or agent to principal. In this, there is some concept to learn. Yeah. Principal to agent, my dear friends. Sir, there is a principal, there is an agent. Principal will technically do something called stock transfer. Actually, what he is doing is stock transfer. He is not doing a sale. But under GST law, this stock transfer is also regarded as supply. Because under GST law, the language used is not sale or purchase. The language used is clearly supply. So this stock transfer is regarded as supply, and this will be taxable, provided agent subsequently gives invoice to customer in his own name. Agent subsequently gives invoice to the customer in his own name. Are we getting clarity, everybody? Come on. Supply of goods without consideration by principal to his agent, where agent undertakes to supply the goods on behalf of principal, or by agent to principal, where agent undertakes to receive the goods on behalf of principal. The supply of goods by principal to agent or by agent to principal, even if made without consideration, will be considered as supply. and the deciding factor is whether the invoice for further supply on behalf of principal is being issued by agent or not. So if invoice is issued in the name of agent, then principal to agent will be taxable. If the invoice is given by the agent in the name of principal, then principal to agent is not taxable, my dear friends. That means what? In simple line, the transaction of transfer of goods from principal to agent, whether it is taxable or not, it will depend upon how the invoice is given by the agent to customer. If agent is giving invoice to the customer in agent's own name, if agent is giving invoice to the customer in agent's own name, then the transaction between principal to agent is taxable. But if agent is giving invoice to the customer in the name of principal, then the transaction between principal to agent is not taxable. Same story will apply even in case of a del creditory agent. You would have heard this in foundation as well. Del creditory agent is that agent who undertakes the responsibility to recover the debtors or collections, for which he gets extra commission, del creditory commission. If he is an agent, then the temporary short-term based credit is subsumed in supply of goods. And if he is not an agent, then the temporary short-term transaction based loan is an independent supply of service. And the interest would not form part of supply of service, supply of goods basically. Because a lot of times what happens is, sir, if you are a principal, I'm an agent. You are sending goods to me and I'm sending the goods to some customer. Customer is not making payment on time to me. Even though customer is not making payment to me on time, I will still make the payment to you because our both contract is del creditory agent. That means I will undertake the responsibility to make the collection to you and give it to you. Even if collection doesn't come on time, from my pocket, I will pay money to you. Later on, I will take responsibility to recover the money. That's called del creditory agent. Are we all clear till this stage? Kindly please reply. Please explain once again, sir. My dear friend, let me tell you, there is a principal, there is an agent. Principal is doing a stock transfer to the agent, correct? It's actually a stock transfer, correct? Now, agent is giving further invoice to the customer, correct or not? That means agent is selling goods on behalf of principal. When the agent is giving invoice to the customer in agent's own name, if agent is giving invoice to the customer in agent's own name, then the transaction between principal to agent will be taxable. But if agent is giving invoice to the customer in the name of principal, if agent is giving invoice to the customer in the name of principal, then principal to agent is not taxable. That is a concept. And del creditory agent is, of course, a person who is responsible to collect the money from the customers and pay it. If he is not able to collect on time, he'll pay from his pocket and subsequently he'll collect along with interest. That's what he'll do. Are we clear, my dear friend? Thank you, sir. Clear, sir. Perfect. Thank you. Everybody, can I proceed? Thank you. So friends, we're dealing with the concept of section 7(1)(c) read with schedule 1, which talks about transactions regarded as supply, even though there is no consideration. That means consideration is not there, still it is regarded as supply. And what is the first point to discuss there? Come on. Permanent transfer or disposal of business asset on which ITC is claimed. Second point, my dear friends, supply between distinct or related persons in the course of furtherance of business. Third point is transfer of goods from principal to agent. And finally, let's talk about the last point, my dear friends. Import of services by a person from a related person. Who is related person already we know. Or from any of his establishment outside India in the course or furtherance of business? Listen very clearly, my dear friends. Think properly and give me an answer. Sir, there is Shiva Teja, who is in India. And there is Mrs. Shiva Teja, she is in US. Now, what she has done, he has given a design for guest house. You might be thinking, sir, why she gave design? Why ma'am gave design? The reason because she is a top architect. Just an example. It is not an architect. Example. Yeah, top architect, she gave a design for the house. And there is no consideration. Tell me, guys, is it? Is it supply? 101%, my dear friends, the answer is no. And the reason for that is it is not in the course of furtherance of business. Clear, my dear friends? Everyone. Now, what would be your answer if design is for Shiva Teja office? Then definitely it will become a supply. Are we getting clarity, everybody? Good. Now I'll ask you one question. Think properly and tell me. So let us say Shiva Teja, who is in India. There is a person, Ravi Teja, who is basically brother of Shiva Teja. Example, sir. He is in US. He is one top architect in US. And what he has done is, he has given design for Shiva Teja office. He has given design for Shiva Teja office. And there is no consideration. My question to you, is it supply? Good. Everybody is telling yes, 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 yes. But the answer is 100% no. The reason because brother of Shiva Teja is not a related person. Sir, you please go back and read the point once again. Import of services by a person from a related person. From a related person. You might get one doubt, sir, why Shiva Teja brother is not a related person? I already told you, related person covers members of the family. And family definition covers what? Number one, spouse and children. Number two, parents. Number two, brothers, sisters, parents, grandparents. Only they are dependent. Wholly or mainly. Now you please apply some common sense and tell me, when Shiva Teja brother is one top architect in US, is he dependent on me? Answer is no. When he is not dependent on me, he is not a member of the family. When he is not a member of the family, he is not a related person. If he is not a related person, this point will not apply. So it is not a supply. Are you understanding, my dear friends? Very, very important point. Are you clear? Good. Very good participation. If brother would have been dependent, he would have become related person. See, most of them happily, comfortably told yes, 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 yes. Gone. Every mark will count. 39 is different, 40 is different, 59 is different, 60 is different. And it's not 1 month, it's not 1 mark, it is 6 months. And of course, now we have 3 attempts, it's still 3 months. Not a joke. Correct, no? Please, every mark will count. Next, I'll ask you one question. Think and tell the answer. What would be your answer if there is consideration of 5 lakhs? Tell me, friends, if there is consideration of 5 lakhs, what would be your answer? If there is consideration of 5 lakhs, my dear friends, 100% it will be supply, but not because of 71C, it will be because of 71B. Because 71B talks about import of services for a consideration, import of services for a consideration, whether or not in the course of furtherance of business. Once there is consideration, your brain should not apply 71C. Your brain should go away from 71C. 71C will come into picture only when there is no consideration. I repeat once again, 71C will come into picture only when there is no consideration. It's a very important point. Come on, friends, let me summarize the whole story, what I just told you. Import of service for consideration without consideration. For consideration in course of furtherance of business, not in the course of furtherance of business. Friends, both case it is supply because of 71B. Without consideration in course of furtherance of business, not in the course of furtherance of business. If it is not in the course of furtherance of business, it is not a supply. In course of furtherance of business, again, please check something. If it is in course of furtherance of business, you have to check from related person, not from related person. If it is not from related person, it is not a supply. If it is from related person, then definitely it is supply. But I'll not put this arrow mark. I will change that arrow mark. I will tell you why. If it is from related person, my dear friends, it is definitely a supply because of 71C, not because of 71B. That's it. I'm sure this chart summarizes the whole story of import of service. And I'm pretty confident and sure that we got full clarity on this. I want your reply. Perfect. Super. Good to see that you guys are very clear. Done. Come on, friends. Without any delay, I'll proceed further. So what are the points we discussed? We discussed about Schedule 1, Section 7(1)(c), read with Schedule 1, where we discussed about 4 points. Yeah, that's okay. Yeah, so 7-1C read with schedule 1, my dear friends. We discussed about the concept of 4 points. Transactions regarded as supply. Transactions regarded as supply, even though there is no consideration. Clear, friends? And there are 4 points there. Number 1, permanent transfer or disposal of business asset on which ITC is claimed. Number 2, supply of goods or services or both between related or distinct persons in the course of furtherance of business. Number 3, principal and agent. Number 4, import of services by a person from a related person or from any establishment outside India in the course or furtherance of business. That's it. Import of service point already I discussed with you. Done. 7-1 AA. This is also over. That is service by any unincorporated association or that club to members. They are regarded as separate persons and it will definitely be regarded as supply. That is 7-1 AA. So friends, if you observe carefully, we are done with 7-1A, 7-1 AA, 7-1B, 7-1C. And 7-1C is ready with schedule 1. Today, let's also complete 7-1A, read with schedule 2, which talks about what are regarded as supply of goods and what are regarded as supply of services. Yeah, 7-1A, read with schedule 2, my dear friends. Transfer of title in goods. It could be either immediately or future date. Future date example is hire purchase, my dear friends. Installment system is different. Hire purchase system is different. Installment system, ownership will pass on payment of first installment. Hire purchase system, ownership will pass on payment of last installment. In every case, we call it as supply of goods only. If there is a transfer of right without transfer of title, we call it as supply of service. Then leasing, renting, of course, service. Any treatment or process which is applied on another person goods like job work, catering, service only. Goods forming part of business are transferred. It is of course goods. The owner uses or allows to use business asset for personal use. It is supply of service. If the owner ceases to be taxable person, then the business assets will be assumed to be supplied by him. That means when you go for cancellation of registration, my dear friends, whatever stock is there with you, it is deemed to have been supplied. We'll discuss more in registration topic. Renting of property, construction of property, transfer of intellectual rights, software activity, agreeing to an obligation or refrain from an act, doing something or not doing something, or tolerating an act, they'll all come under supply of service only. Works contract service. Works contract service is a contract where there is element of goods as well as service, and this word works contract is used only in case of immovable property. For example, sir, if I call one painter and I give him a paint box and I tell him, please paint this room, what he is doing is called service. If I go to a paint shop, purchase one paint box, it becomes goods. Next situation, I call one painter and tell, you only bring the paint box, you only do the painting. That is called works contracts. And under GST law, it is deemed to be service. Then any supply of food or any other article for human consumption, restaurant service, eating joint, they'll all come under supply of service only, my dear friends. And construction of any complex building, civil structure, and I'm sure you know this concept, that if any consideration is received before OC, that is completion certificate or occupancy certificate, then only GST will apply. If entire consideration is received after OC, then of course GST will not apply. You would have heard this concept already before, and I'm sure you know this. Even if 1 rupee also comes before OC, then GST will apply. That means, let us say, if flat is sold for 1 crore, 10 lakhs is received before OC, 90 lakhs is received after OC. In that case, GST will apply on entire 1 crore. Even if 1 rupee also comes prior to OC, GST will apply on full value, sir. Here, that's it. 7 to read with schedule 3. We'll do one thing. This will take some time. We'll discuss that in the next session. No problem. But I'm sure we are clear till this stage, everyone. We discussed a lot about introduction and basic of GST, and we have spent some good time on discussion about a lot of interesting points in the context of supply. But we still have a lot of points more to discuss, my dear friend. In the next session, I'll discuss the balanced concept of supply, and I'll start with some other interesting topic as well. Based on time, we'll take the decision. Clear? I am sure we are fully clear with whatever concept I discussed with you till now. Kindly please reply. And I'm sure you guys have enjoyed this session. Please confirm. I'm waiting for a reply, friends. Thank you so much, guys. Thanks for your response, and I'm happy to see that you guys are fully clear and fully perfect. Thank you so much. Take care. Shiva Teja signing off for this session. Next session, we'll talk more in detail about a lot more interesting concepts. Thank you. Take care. Bye-bye.